Good evening and thanks for joining us. This is NTD Business and I'm Paul Graney. Apple unveils a whole new range of 5G iPhones at a whole range of prices. The president is still calling for a stimulus package and he's telling lawmakers to go big. But what are the downsides of government intervention and bailouts? We have analysis. Economists give the virus a price tag that is 4 times higher than the Great Recession. And earnings season starts this week. JP Morgan's results may come as a surprise. The International Monetary Fund is feeling more positive about the global economy. It estimates the world economy will shrink by 4.4% this year. Not great, but better than the 5.2% June estimate. It predicts the US will shrink by 4.4%. It's much better than the 8% contraction it predicted in June. But the IMF sees trouble in many emerging markets. It says those economies are, of course, much more dependent on hard-hit sectors like tourism. And America's small businesses seem to be feeling more confident too. The latest data shows business confidence rose last month to its highest level since February. Companies are seeing more customers and more sales. NFIB's chief economist says as parts of the country continue to open, small businesses are seeing some improvements in foot traffic and sales. More small business owners reported hiring or trying to hire, but over a third of them couldn't fill their openings in the same month. The group says some small businesses are still struggling financially to operate at full capacity, while navigating, of course, state and local regulations. They're now uncertain about what will happen in the future. The organization's uncertainty index rose 2 points to 92, matching its March level. But 2 famous economists estimate COVID-19 could cost the United States about 4 times as much as the Great Recession. They're calling it the $16 trillion virus. Here's the details.
Former Treasury Secretary Lawrence Summers and fellow Harvard University economist David Cutler estimate the pandemic will end up costing the United States $16 trillion. They published their paper in the Journal of the American Medical Association on Monday. They estimate that about half the $16 trillion is lost income from the economic shutdowns. The other half is the economic impact of premature deaths and long-term health problems from the virus. They estimate premature deaths will cost about $4.4 trillion over the next year. For people who get the virus but survive, some will likely have long-term health problems. They estimate that will cost about $2.6 trillion. And the pandemic's toll on mental health, they estimate that will cost about $1.6 trillion. Summers and Cutler suggest focusing on policies like wide-scale population testing, contact tracing, and isolating patients. They say this strategy could provide economic benefits 30 times greater than the cost of investment.
And on top of the direct costs of the virus, we also have the indirect costs of massive government aid packages. President Trump again called for a big stimulus package today. In fact, he told lawmakers to go big or go home. He wants to bail out the airlines for a second time this year and stimulate the economy by injecting more cash. Stimulating the economy can, of course, postpone recessions, but that's not without its downsides. I discussed it with both Daniel IKEA and Lance Roberts today. IKEA is the author of Escape from the Central Bank Trap, and he's the chief economist at the Chesses Hedge Fund. Roberts is the chief investment strategist at Real Investment Advice. Lance, we have a saying on this show, we actually took it from Daniel IKEA here. He calls it the bailout of everything. And it seems like not just this year, this really exceptional year, but even before this, we seem to do everything to avoid recessions. And a lot of people would say, well, that's great. Let's just keep trying to avoid recessions. But of course, with everything, there's pros and cons, even recessions. So what exactly are we missing out on by running away from them?
You know, economic recessions have been deemed by the Federal Reserve and government as bad things, right? We have to avoid them at all costs. But the reality is that recessions are part of the normal economic business cycle. And during expansions and growth that we have, we had a decade worth of economic growth, we build up excesses. These excesses are lots of debt, both personal as well as corporate, as well as government. And these recessions allow the reversion of that debt. And that helps ease the burden on the overall economy, allows people to restructure themselves in the economy. It's with corporations as an example. We've decided that corporations can't go into bankruptcy. We've got to bail out. And the reality is that bankruptcy is there for a reason, to allow indebted companies and indebted households to reset themselves so they can start their economic cycle. And the problem we've decided not to allow to occur. And in the process of that, we just continue to build up more debt, which erodes economic growth, lowers productivity. And we've written lots of articles on this. The data is very clear. And it baffles me why politicians in particular keep choosing the easy answer, which leads to long-term economic prosperity, but doesn't really solve the problem that has led to massive wealth gaps and lack of prosperity for individuals across the country.
And Daniel, you've brought up this point for us before as well, and you've talked about how we're leaving a mountain of debt for our children's generation and for our children. As individuals, do we have any control over this, or are we kind of at the mercy of what the central government will choose to do?
We do have control. The first thing that we would have to do as voters is to stop believing in the money magic tree. Doesn't exist. And to stop believing that that overcompensating with debt and with higher spending the excesses of the present, that things are going to get better in the future. I think that people should understand that massive debt and huge bailouts of almost everything will end up creating is lower productivity growth, which means lower wages in the future for you and your children, and two, much higher debt, which means higher taxes in the future. So what people need to understand is that deficit spending and debt is not a social policy. It is actually anti-social because it drains out from the productive capacity of the economy and takes it to the non-productive part of the economy. And worst of all, it creates a worse landscape in the future for the future generations. We talked about how we get out of recessions with lower productivity growth, with lower improvement in employment, and also with lower GDP growth. And that is not a coincidence. It's the debt burden that governments present themselves as the solution to a recession when they don't have better or more information about what the economy needs. That's why the private sector needs to get the opportunities to clean up and to grow quickly.
Okay. Lance and Daniel, appreciate your time as always. Thanks for coming on. Talk soon.
Thank you.
Wall Street lost ground today with all three major indexes closing in the red. The Dow fell nearly 158 points or 0.55%. S&P 500 lost over 22 points or 0.63%. The Nasdaq dropped more than 12 points or 0.1%. And third quarter reporting season kicked off today. We have some details about JP Morgan in just a moment. Other earnings on tap this week include Bank of America, Goldman Sachs, Wells Fargo, Morgan Stanley, United Healthcare, and United Airlines. And JP Morgan's first up, it reported much stronger than expected results for the third quarter, beat profit estimates, and benefited from a stock trading boom. It also set aside relatively little money for loan losses, just over $600 million compared to over $10 billion in the last quarter. Maybe a sign that JP Morgan thinks it's already experienced the worst of the economic slump. Analysts say profits at S&P 500 companies dropped nearly 21% in the last quarter. JP Morgan profits actually grew by 4%. Investors may be now hoping the earnings season won't be as bad as expected. JP Morgan's chief executive Jamie Dimon says the company is still going ahead with a big new headquarters in New York. Many now doubting the future of office buildings because of the pandemic and more people working from home. But Dimon says it's a decision that's going to last into the long term. When finished, it'll be the second tallest office building in all of Manhattan. And Apple shares are down today as well. Investors not excited about the new iPhone 12, it seems. It's just out today. It's a 5G phone and starts at $799. There are also two higher-end versions. They're about $1,000 or more, and a mini version with a smaller screen. It's $100 cheaper. Apple says every model in the United States will support the fastest version of 5G. Some of the rivals, of course, only support the lower frequency versions. Pre-orders for the new phones begin as early as Friday. And another big event today, Amazon's Prime Day. The event was postponed in the summer because of the pandemic. We have some details today for any of you bargain hunters.
Amazon.com kicked off its delayed Prime Day on Tuesday. The global marketing event will see 48 hours of promotions and is typically held in July to boost summer sales. This year, though, it was delayed due to the global health crisis and now happens during what will be an earlier holiday shopping season. Prime Day offers discounts for members and is key in how Amazon markets Prime, its fast shipping and media streaming service that encourages subscribers to shop more with the company. This year, Turkey and Brazil are added to the list of countries that get it. Amazon isn't the only firm hosting promotions, though. Its US rivals Walmart and Target are due to host events at the same time. And online sales may prove critical for leading retailers this year, as the virus continues to keep shoppers away from stores. Amazon has faced criticism, however, about the effect Prime Day has on its workers. A report by news site Reveal said the week around last year's event was the most dangerous for employees being injured at Amazon's fulfillment centres. One leading workers' union said it meant more injuries and unacceptable levels of stress for its workforce. Amazon pushed back against that. It says worker safety is a top priority and injury rates are not higher during the holiday season. A workers' union has also taken action to coincide with Prime Day in Germany, Amazon's biggest market outside the US. The union Verdi said its two-day strike is part of a long-running battle with Amazon over better pay and conditions. Amazon said most of its employees would work as normal despite the call to strike.
And Johnson & Johnson has temporarily paused its CCP virus vaccine trials. The company says someone fell ill from the study for unknown reasons. An independent board is now reviewing the case.
Johnson & Johnson announced Monday it's temporarily paused trials for a COVID-19 vaccine after a participant in the study fell ill for unknown reasons. The news delays one of the highest-profile efforts to contain the global pandemic, and it's another major setback for the COVID-19 vaccine race after AstraZeneca paused late-stage trials of its vaccine candidate last month, also due to unexplained illness in a trial participant. Johnson & Johnson said in a statement that their participant's illness is being reviewed and evaluated by an independent monitoring board, as well as the company's clinical and safety physicians. The company said that the current study pause in giving doses of the vaccine was different from a regulatory hold required by health authorities. It added that such pauses are normal in big trials, which can include tens of thousands of people. J&J had kicked off its final 60,000-person trial just last month, the results of which were expected by the end of this year or early 2021. Johnson & Johnson declined to elaborate on the participant's illness due to privacy concerns, but the company says that some participants in studies get placebos, and it can be unclear whether a person suffering a serious illness in a clinical trial received a placebo or the treatment.
And still to come this evening. The EU gets a green light to impose tariffs on US imports. That could include American wine, spirits, tractors, or agricultural products. And a former Conservative leader in the UK calls for a national security review of any British businesses that Chinese companies plan to buy. We speak to a British foreign policy expert to get his view after the break. Welcome back. The latest on the aircraft subsidy battle between Boeing and Airbus. The World Trade Organization has actually ruled in favor of the European Union. It can now impose tariffs on $4 billion worth of American goods. It's in retaliation against US subsidies for Boeing.
The European Union on Tuesday won the right to impose retaliatory tariffs on US goods. The World Trade Organization ruled the EU can charge levies worth $4 billion on imports from the US. That's in retaliation for subsidies granted to plane maker Boeing by the US. It's a decision that could further inflame transatlantic trade tensions with just 3 weeks to go until the US presidential election. Although optimists will hope it could settle a 16-year legal battle over subsidies given to their respective playmakers, Boeing and Airbus. Tuesday's decision follows a ruling last year that allowed Washington to impose tariffs of $7.5 billion on EU goods over state support for Europe's Airbus. But there have been signs both sides are willing to negotiate a resolution.
And in the UK, a former Conservative leader has called for a national security review of British businesses, as if Chinese companies want to buy them. He's concerned about China's growing economic influence there. We spoke with a foreign policy expert to get his view.
A former UK Conservative leader wants the British government to vet British businesses for national security risks. He's concerned about China's growing economic influence. We spoke with a foreign policy expert, Sam Armstrong.
While the UK does have powers to vet the acquisitions of UK companies in certain national security grounds, those powers don't go far enough. The government have admitted that, which is why they're proposing to bring in further legislation.
He says UK law works well for clear security threats, but not so in other areas where there might be a threat. He says the global blood plasma market is an area of concern. It's one of the most promising areas of therapeutics for COVID-related illnesses. BPL Group, Britain's leading supplier of blood plasma, was bought by a Chinese investment firm in 2016.
And we now are in a situation in which the global blood plasma markets have seen enormous control by Chinese companies and the world's largest exporter of certain blood products.
He says that China's stranglehold on the global supply of essential medicines is a security risk. He says that the US is ahead of this problem because they have a committee on foreign investment. He says that's what the UK needs.
And still to come this evening, IKEA says it will buy back your old furniture. Find out how much you could get for your old IKEA items after the break. And a Thai airline is getting creative to keep its customers. It's offering fans time on a state-of-the-art flight simulator. Check it out after the break. Welcome back. If you're tired of your old IKEA furniture, you don't have to worry. You'll soon be able to sell it back to them. The company hopes it will reduce waste and curb overconsumption.
The scheme will run from November 24th in 27 countries. Customers with as-new items can get back 50% of the purchase price. Items with minor scratches earn 40% and well-used ones 30%. Customers will be paid with vouchers that have no expiry date. There is one catch though. All items have to be brought back fully assembled. Tricky perhaps with, say, a big bookshelf. IKEA though says the move is part of a stand against excessive consumption, not least ahead of the upcoming Black Friday global sales event. It says any items taken back which can't be sold will be recycled or donated to charity. By 2021, it aims to have dedicated areas in every store where people can sell used items and find repaired and refurbished ones.
And travel fans in Thailand are getting their airline fix. That's thanks to Thai Airways flight simulator and a jet-themed restaurant. The airline is offering time on its state-of-the-art flight simulator so wannabe pilots can see what it's like.
If you're nuts about air travel, it doesn't get much better than this. A hands-on half hour at the controls of an Airbus simulator. Pilots explain the buttons and digital displays before taking students to the virtual skies.
I'm very excited, especially when you get to see something that looks so close to real flying. It makes me realize what a beautiful workspace this profession has. I hope one day I can be in that position.
The pilot who manages the project says it's not about the money.
The real objective is to keep the relationship with Thai Airways passengers. With those who miss us or those who want to learn about being a pilot, all can join our programs. We miss our passengers too.
Thai Airways often ranks among the world's top airlines, but the pandemic hit air travel hard, and they've had to get creative, like transforming the old staff canteen into a restaurant. The Royal Orchard dining experience opened in September. Managers say it currently packs in about 800 people a day. For diners, it's about more than just food. It satisfies a craving for faraway places and happier times.
This recalls my memory of being on board. I feel like I was on the plane and I enjoy so much.
And there's more to come from Thai Airways. Next up, sightseeing flights around Thailand and a training course for would-be cabin crew.
There you go. That's the latest business updates for today. Thanks so much for watching as always, and we'll see you tomorrow.